Hi, this is Lara at Elliott Wave Stock Market with your daily analysis for the S&P 500 for the trading session dated Tuesday 17th of May. And I'm recording this video now, just gone 11 PM in the evening New York time on Tuesday the 17th. This is our daily chart, our main wave count for the S&P, which is still expecting further upwards movement. Wave 5 blue must subdivide into a 5-wave structure. So far we only have 1, 2, 3, 4 waves visible clearly on the daily chart. We should really see it as a very clear 5-wave structure. Our targets remain the same, where C black reaches equality with A black, and where 5 blue reaches equality with 3 blue. The invalidation point is the same. Technically, wave 2 green may move right down to the start of wave 1 green at 1294.7, but not below that point. We have an overshoot now of this big wide blue channel that's contained upwards movement very well indeed for almost a year. We have a little overshoot here in wave 4 blue, a much bigger wave degree correction, and a very, very almost slight overshoot down here, but apart from that, it's contained price very well for quite a long time. I would expect after this overshoot that this channel would pull price back in pretty quickly. This wave count is invalidated with movement above 1576.09 because primary 2 may not move beyond the start of primary 1 at that price point. I have 2 hourly wave counts for us today, taking you to the first where the high for 1 green is this point up here. We can draw this nice trend channel now around this wave 2 zigzag, and it very nicely shows us almost where wave C may have ended. Downwards movement invalidated yesterday's main hourly wave count, which I had expected had a much higher probability than the alternate, which did allow for a little bit more downwards movement. The problem with low probability wave counts is although they have a very low probability, they are technically possible, and sometimes they do occur. I expect that's what happened yesterday. I've adjusted the wave count within this piece of movement. It can't be a diagonal or a leading diagonal because the 5th wave would be longer than the 3rd and the 3rd would be the shortest. It looks like a simple impulse for wave C orange. If it was over here, wave C is almost perfectly equal to wave A, and it's almost perfectly come to end in this parallel channel. It's highly likely then that it was over here. This upwards movement may have already seen a complete 5-wave structure and be working on probably a flat correction for a little wave 2. Wave 2 may not move beyond the start of 1. This main hourly wave count is invalidated with movement below 1318.51. It's confirmed if we see price movement above this point, 1336.36, and we'll have trend channel confirmation when we have at least one full hourly candlestick above this channel here on the hourly chart. At that stage, we can be pretty confident that we've had an end to a zigzag and we're within a 3rd wave impulse upwards. The target's been recalculated with this new low. Wave 3 green will reach 1.618, the length of wave 1 green, at 1392.77. The difference between this main hourly wave count and our alternate that I'll go to next is how we see this little piece of movement here. This main wave count, I've looked at this one on a 15-minute chart, and when we look at it there, we can see a very clear 1, 2, 3, 4, 5, 6, 7 waves down from this high to this low. And so I expect this is the correct way to count this piece of movement. We have to see the 2 separate waves in here. The alternate doesn't look at it like that. The alternate sees it as a 5 from this high to this low, which it does look like on the hourly chart. I expect that this main hourly wave count has a higher probability for a few reasons. The first one being that I expect this is the correct way to see this movement. The relationship between A and C, they're almost perfectly equal. C has ended almost at the lower edge of this parallel channel containing this zigzag, and the overshoot on the daily chart probably means that that's as far down as it can go and price should move back into the channel fairly quickly. However, if we do see further movement below 1318.51, then this alternate hourly wave count, although it has a lower probability I expect, would be confirmed. I have a target for downwards movement at 1318.03. Wave C orange will reach perfect equality with wave A and would allow for only a very, very slightly new low at 1314.92. If wave 4 purple ended here, then wave 5 purple will reach 0.618, the length of wave 1 purple. So that's our small target zone for the downside. This alternate wave count only expects one more final push downwards. It doesn't even technically have to make a new low, it could be truncated. It's just most likely that if this wave count's correct, it won't be truncated. As I said on the main hourly wave count, we're looking at this piece of movement differently, and that's the difference between the two. Here we have a 5-wave structure down, so this is wave 1 within wave 3, and wave 3 purple is only ended down here. Wave 4 may not move into wave 1 price territory. That's why this wave count is invalidated with movement above 1336.36. So movement above that point would confirm our main count. If price does move below this price point and make a new low, and it moves towards this target, then we may possibly still see this eventuate with only one more daily candle overshooting the parallel trend channel on the daily chart. Another day's candle overshooting would be acceptable, but a full daily candlestick outside the channel would not be acceptable and would indicate a trend change at primary degree. This alternate daily wave count is a very, very slim outlying technical possibility. We really only want to seriously consider it if we see price movement further below this parallel channel, and it may be considered confirmed initially with price movement below 1294.7. It is just possible to see wave 5 blue as an ending contracting diagonal. However, an ending contracting diagonal requires each and every subwave to subdivide into zigzags. That's the most important rule for diagonals. I have a great problem trying to see this as a zigzag and this as a zigzag, and also with wave 4 of the diagonal ending from here to here, it is possible but a little difficult to see this as a zigzag. The zigzags of a diagonal, if it's so large, really should be obvious on the daily chart. Like this last fifth wave here, there's no problem with this piece of movement, but all the others, there's a bit of a problem. It would be invalidated firmly if we see price move above 1359.44. At that stage, we would be expecting further upwards movement. Only if we see a full daily candlestick below the lower channel, the lower edge of this channel, should we seriously consider this wave count. It calls for an extremely big trend change, and primary 3 must take price substantially beyond the end of wave 1 at primary degree, which is at 666.79. So I expect this has a very, very low probability. But just to illustrate what would happen if we saw a full candlestick outside this, this is the possibility we'd have to consider. So that's all for me today with your Elliott Wave S&P 500 analysis, and I hope that everyone else is having a fabulous day.